What is the core role of central banking supposed to be?
So the core role of central banking takes place in any society in which you decide that you are going to have a limit of private claims against other individuals or other entities. The minute you decide that you are going to place any limit, in other words, you cannot put somebody into debt slavery, you cannot take possession of somebody's body, you need to have an adjudicant who is capable of resolving those disputes. That's what a central bank is. It is the intermediary who plays the role as the lender of last resort to facilitate the solution of claims.
All right, I think that term is probably going to come up a fair amount in this discussion. Can you just define lender of last resort?
Sure, the lender of last resort is somebody who ultimately says, I will take this collateral that is currently illiquid, but I believe to be of adequate value, and I will give you something that there is no question as to the provenance or its ability to settle a claim, for example, cash.
Okay, great. And the reason why the role of lender of last resort is important, and I'm going to put some words in your mouth, feel free to correct them in any way, is at times in history, we have had instances, maybe sort of cascading defaults in the system, which if left unchecked could just plunge us into a bad place we don't want to be. And trust has been lost in the system where market participants aren't interacting with each other, aren't necessarily lending to each other, and credit's a huge lubricant of commerce. So the Fed steps in and can play a role and say, hey, I'll be the trusted party that will exchange with you guys. And it sort of hopefully stops that cascade effect from getting worse. Did I describe that accurately?
I think that's reasonable. And we will introduce these terms in the future, but remember what credit is. Credit is ultimately private money, right? It is me saying, I am going to actually make good on some future obligation, right? Or somebody else that I have lent money to, I stand behind their claim. A central bank interjecting itself as the lender of last resort is willing to exchange that claim that I have against another private individual with a claim against the state. That's it. That's all they're doing.
I think at the end of the day, the role of the central bank is to facilitate government borrowing. That is, the role of the central bank is to allow the government to control the money supply. I think I don't believe in conspiracies. There's no conspiracy theory here. I think that after 1907, the government basically came to the conclusion that we didn't want to trust private entrepreneurs to resolve issues, within the economic issues. We didn't want to leave it up to private enterprise to deal with these things. We want to bring it under government control. Part of it was motivated, I think, by better people, I think mistaken, but better people who thought this was a way to create a more stable economic system, a more stable banking system. But I think part of it was motivated by power. Part of it was motivated by how dare somebody like JP Morgan have so much power over economic activity. This really should be part of state action. This should be part of the state. And it turns out that once you give the central bank the power to print money and to buy bonds and to engage in that, well, it turns out that it's not a bad ATM for government spending. That is, for a growing welfare state. FDR discovered this in the 1930s. It was in the 1960s. It was a great ATM to fund the welfare state, the new welfare state that was being created by the Great Society. And ever since, since 1971, when we went over the tiny remnants of a gold standard, it's basically been an ATM for the government to print money. And yes, it bails out banks, but it bails out the system usually from problems that it created. So most systemic risk in the system that exists today, I'd say over 90% of the systemic risk that exists in the system today is created by the fact that we have a Federal Reserve. It is the most systemic entity in the economy. Every action it commits to has implications to the entire system. It sets interest rates wrong, and we debate what wrong is, but if it sets interest rate wrong, it affects everything. Interest rates are something that is not, that doesn't just affect a sector, just a location. So I think while some people intended the central bank to be this land of last resort, to increase stability and to do all that, It has not done any of that. It has not executed on that role, and it's actually evolved much more into what the Bank of England was. I mean, the Bank of England was the ATM for the king. I mean, it was to fund his wars. I mean, why borrow money from the Jewish moneylenders and have to pay exorbitant interest, and then have to do a pogrom once in a while to get rid of of the people who lent you money? Instead, you can establish a central bank that goes into debt for you, in a sense, and funds your wars. So I think it's a mechanism to fund government, and in that sense, I think it's a corrupt and immoral system by which the government gets around a lot of the constraints the private sector places on its activities.
If you enjoyed this video clip, click here to watch another one you should like.